Let's get Udayan Mukherjee into our conversation. This is the big budget week, so everyone's got their one eye on the budget and the other on the market. Udayan, hi, good morning, and thank you for joining us. The platform for the budget is ready, but I guess the risk lies in already very high expectations and perhaps the delivery being generic rather than detailed. At least that's what some experts are fearing. How would you approach the big event?
Hi Sonia, good morning. I think the script has played according to expectations. You'll remember that many months back we spoke about the Nifty being around 9,000 on budget day, and I would still say that on the budget day the Nifty will probably be at or around the 9,000 mark, give or take 50-60 points. There have been a few bumps along the way, but the market's generally moved in the right direction and has reached that point that we all thought it might reach around the budget day. Also, the last few weeks, again, there have been a few hiccups, but broadly the market's held a range between 8,500 and 9,000, which is not too bad. It's consolidated, corrected, and then bounced back almost to reclaim all the lost ground. So you can't say that there has been a massive pre-budget rally in that sense, because the market first fell to 8,500 and then came back to 88, 8,900 or 9,000 on budget day. Also, there has been no significant pre-budget correction. It looked like that a few weeks back when the Nifty was knocking on the gates of 8,500, but we've recovered lost ground. So I think in a sense the market's going into the budget with some kind of a neutral gear. It's also good that the technicals of the market have been interesting going into the budget, because we haven't had massive FI flows in February at all. If anything, excluding the Hero deal, they've been on the sell side. It's the local money which has actually come in before the budget, around 3,000 crores. Now, you can call it whatever you will, that the smart money is waiting on the sidelines, where some of the frothy money has come into the market before the event. So there will be some turbulence around it, but I think we are going in with neutral gear, and the way the FIR money has moved over the last few weeks would suggest that the smart money at least is going in with some expectations, but not sky-high expectations.
Hi, Udayan. So, therefore, would the reading be that despite at least big expectations being rolled out in the media, even if the budget were, to just mildly come up to expectations, you shouldn't expect a sell-off after the budget?
Lata, the way to look at it is, what is the market expecting? Because depending on who you ask, there would be a lot of questions or answers on what would make the budget from a market perspective. My sense is that it's not the fiscal deficit number, as a lot of people like to believe, that whether they'll put out 3.6% or 3.8% for next year, whether they'll hold 4.1% for this year. We know that by hook or crook, the government will keep the number that was promised and probably try to do a little bit better for the next year. So that is not such a relevant number in my book. Beyond the day, I don't think it causes turbulence in the market. I also think that there is a lot of talk about the enabling framework for corporate India, which the government might put out in this budget. That too, in my eyes, I know there's a lot of hype around what might come in terms of structural changes. That too, I think, is probably a second place in my book in terms of determining whether the market goes up durably, not just on the day, but durably after the budget. I think the important thing in this budget is what the government does in terms of spending money on its own to try and drive up or pump prime the economy a little bit because it's sagging. I don't think the enabling framework works at this point in time, because at the end of the day, CEOs trust revenues more than anything, any fine print in the budget. And the revenues are just not there at this point. You go and tell a CEO, we put out a good budget, the Sensex goes to 10,000, will you start unleashing capex from next week? They will say, no, I need to see on the ground, because it's my skin in the game. I need to see the first uptick in revenues and consumption demand picking up before I unleash capex. And to do that, I think the government has to pump prime a little bit. So more than the enabling framework, more than the fiscal deficit, what takes the market up durably after the budget is what the government does to say, I'm going to put the first bag of cash to work now, and you guys will follow me after 6 months once you see the first green shoots. So I think the make or break for me is what happens on that score, and of course some of the very key promises like GST in this budget. If that were to come through, I think we are talking durably 9,000 plus post the budget for the weeks to come.
Short gestation multipliers are usually, say, road projects, low-cost housing. So do you think it's sensible, therefore, to go with EPC contractors, cement, these kinds of stocks long?
I think that's what the market will do, Lata, but there could be a few other players like maybe ports and railways, those kind of companies as well, which might stand in line along with the companies that you mentioned. So if the market is betting that this will be a budget which will deliver the kind of stuff that we just discussed, then yes, some of the, I would say, the ancillary infrastructure players. I mean, the big ones are very obvious. But, you know, the earth-moving equipment kind of companies, and there are plenty of them in the small-cap, mid-cap space, those kind of names, I think, should get some kind of attention. And some of the asset owners. I think the government, if it has to pump prime or to put some kind of steroid injections, it will have to touch upon some of those port, railways kind of companies as well. So I think that's a good selection. And I would say some of the commercial vehicle companies as well might come into play if the budget delivers the kind of stuff we are talking about.
What do you do with the banks now, Udayan? Because in this series so far, there's been huge underperformance from the banks. I mean, the bank Nifty is down about 7%. So ahead of the budget, does it make sense to top up on any of the banks or just stay away?
Well, I don't know what the budget reaction will be, Sonia, because you know, there are two possibilities. That the budget is nothing exceptional, and therefore, given the weight of valuations at this point, where, you know, the market's probably trading close to 18 times, it's not cheap. Foreign money for the moment is not gushing in, and therefore, if the budget is not a huge disappointment, but a pedestrian one, let's say a very average one, then the market might recoil, and the recoil might take you back to those 84, 8500 kind of levels, not immediately on budget day, but over a period of time. That, I think, is the real strong port of support still, that 84, 8500 zone. And if that were to happen, then the banks would correct some more, because, as you pointed out, they seem vulnerable at this point. However, if the budget has surprises for the market, and let's say the Nifty is on floating around 9,000 around the event, and then it gets a surprise, then we break past 9,000 and we get to those 9,300 kind of levels. And if that happens, I think infrastructure first, and then maybe spurred on by the outperformance of the infrastructure space, you could probably get the banks to participate once again. I don't think banks would lead in the run-up to the budget, but if there is a big infrastructure surprise, I think as a rub-off, banks might come back into play.
How are you looking at the earnings season then? This was one of the most disappointing earnings seasons we have reported on. I mean, whether you looked at revenues, at least in the previous 2 quarters, we saw some bit of margin improvement. This time we didn't even get that. Will that kind of become a reality check, and after the hype of the budget, that will come to have its say?
That's certainly a possibility, and that's why the market's looking expensive, Lata, because, you know, right now the market's in the grip of a very strong uptrend. There is just no two ways about it. Also because the technicals of the market have changed, domestic money has come in, and therefore the market is on far more stable footing, technically speaking. You know, a few quarters back, if you asked people, what do you think of earnings? They would have told you earnings have stopped falling. It's only a matter of when earnings start upticking once again. And this quarter, we actually saw earnings contraction, and I think a few downgrades in terms of earnings. I thought that the era of downgrades was over. So it came as a bit of a shock that analysts are still downgrading earnings for the index. But, you know, there are two possibilities out here. One is that we get a pedestrian budget, and the market then gives up some ground and consolidates and digests the fact that earnings have still not picked up. The other is that this is a phase typical of an early stage of a bull market, where a lot of people will keep calling the market expensive because earnings are still not there, and the market will continue to ignore that, and earnings will, and P multiples will continue to expand in the face of fairly average earnings till the earnings catch up. So I'll give you an example of the second scenario. But right now, I think most people believe that the Sensex earnings will stop somewhere around 1460 rupees for the current year. Even if you get a 15% jump in earnings in the next 12 months, you're going to reach about 1680 on the Sensex EPS. And you multiply that by 20 P multiple, you get to something in the vicinity of 33,500 Sensex and just above 10,000 Nifty. My sense is that unless something goes terribly wrong globally, you will get to that 20 PE multiple number 6 months forward. So in another 6 months, say in around October, you will be looking at a scenario where 6 months forward, which is FY16 earnings, the market is trading at 20 times, and a little cheaper than that 18 months forward, which is when people start talking about 2017 earnings. So I wouldn't be surprised if we do get a dip. And right now in the middle of the year, if we get to something close to 33,000 Sensex or 10,000 plus Nifty by the time October rolls in. Now, whether before that we see 8,400 or 8,000 once on the Nifty is the moot point, to which the answer is clear only after the budget.
Okay, well, I just had one follow-up question, Udayan. We have just about a minute left. How high is the possibility of a big sell-off post the budget? Because, you know, if it is a pedestrian budget, as you suggested yourself, there have been a lot of criticism coming in from corporate India. Deepak Parekh is the latest one. Do you think that impatience from corporate India could trickle down to the market as well?
That impatience from corporate India, Sonia, will have to trickle into impatience on the part of investors as well. But, you know, investors have seen earlier bull cycles, and I think having learned from that, they would want to be patient for another couple of quarters. I think you will continue to see that mismatch between what you're hearing from CEOs and what you're hearing from investors. Investors will look into the future and wait. CEOs will pound the table with impatience that my revenues are not growing. But in this tug of war, I think from a market perspective, what investors are saying is far more important. CEOs will catch up in a little while. I would lay a lot of more greater store for investors.
All right. Thanks a lot for that, Udayan. Pleasure speaking with you, and I hope we'll catch you again either on budget day or soon thereafter.